Hi there, Stan the Annuity Man, America's annuity agent, licensed in all 50 states and Puerto Rico, founder of CGO, Contractual Guarantees Only. We only look at what a policy will do, not what it might do. Today's topic is about variable annuity suitability, but I'm going to cover suitability in general for annuities and what you should do there. But we're going to talk about that and that weird little practice that is very important so you don't overfund annuities after this. All right, so the first thing you probably need to know, especially if you're thinking about working with a local agent and not us, I don't know why you do that unless they're your brother-in-law, and even then there's a reason not to. With annuities, the National Association of Insurance Commissioners that oversees the body of the states that issue annuities, etc., they recommend no more than 50% of your investable assets in annuities. That does not include, when you talk about how much money you have, that does not include your house, property, cars, guitars, all that stuff. We're talking about investable assets. No more than 50%. And if you're one of those people out there that says, well, this dude sold me 80% of the money or 100% of the money, then they committed a fraud. That's fraudulent. They either did something on your application to show more net worth, or they were not honorable in filling out the application. And if that's the case, I mean, it's a misdemeanor. They definitely lose their license. But I always tell people with annuities, there's 8 different primary types of annuities, and they solve for 4 things: principal protection, income for life, legacy, and long-term care. I mean, when you're looking to solve for one of those situations, we try to use the least amount of money to solve for that contractual goal. I had a guy call me the other day, I'm thinking about putting a lot of money in an immediate annuity, son. What can you do? Well, I can quote all carriers and find the best contractual guarantee, A+ or better. Bigger question, Ernie, how much money do you need? He goes, well, I kind of need about $2,500. That's how he said it, $2,500. I said, okay. We reverse engineer the quote for $2,500 using the least amount of money to solve for that goal. So when it comes to annuity suitability, whether it's variable annuity, registered index annuities, indexed annuities, MIGAs, QLACs, SPIAs, DIAs, doesn't matter. You have to be suitable from the standpoint of the insurance company looking at your finances so that the annuity makes sense for you. It's specifically solving a goal. You're not putting too much money into an annuity. Annuity suitability on the brokerage side, which I came from, Morgan Stanley, Dean Witter, Payne Weber, UBS, those products are variable annuities and registered index-linked annuities. Brokerage firms, banks, the people out over there selling those hopes and dreams products because they're not guaranteed, and that's the reason we don't look at them. There's a whole litany of suitability that they go through from the standpoint of background checks and things like that. There's a lot on the brokerage side. I mean, it is extensive. If you have a brokerage account, you know that. On the life insurance side for fixed annuities are index annuities, MIGAs, QLACs, SPIAs, DIAs, etc. On this side, those are regulated at the state level. All right, so the National Association of Insurance Commissioners kind of oversees the whole thing. SEC and FINRA is over here on the variable and the registered index link, and then this is just the insurance commissioner in your state that's overseeing the fixed side. So suitability means, should you own it? Why are you trying to purchase this? What goal is it going to solve? What's the proportion, what's the amount, percentage of money you're putting into the annuity as opposed to the rest of your investable assets? People say, well, can you get more than 50% of my investable assets in annuity, Stan, if my situation is different? Yes, we can. There are unique situations on a daily basis that I personally get involved with, and I talk to the carriers and say, this is what they're trying to do. It actually makes sense. I'll put my license on the line for it because I believe it's suitable. And with my explanation and documentation, the carrier either says yes or no. And it's not always going to say yes. Suitability is your best friend. Suitability makes sure that you're not buying a product that's not going to do what the agent said it's going to do. Because in the application, you have to say what your goals are. What are you trying to solve for? What's the goal? Blah, blah, blah. You got to do all of that. That's suitability. Now, the information that's provided to the annuity company, That's confidential. It's encrypted. Nobody shares, keeps, or sells any of that. So don't go down the privacy rabbit hole and go, well, I'd like an annuity, son, but you're not going to get my social. I haven't done that. I'm a patriot. Well, you're not going to buy an annuity, okay? Just because back in the day with the Patriot Act, there's a lot of money laundering in the life insurance and annuity space. Bitcoin's kind of stolen that mantra. Crypto, I guess you could say. I don't want to pigeonhole Bitcoin, crypto in general. But before crypto, the life insurance and annuity side was where a lot of the money laundering shenanigans were happening. So the Patriot Act was put in place to make sure there weren't shenanigans. Are there still shenanigans? I'm sure there are. But guess who's on the hook for that? If there are, the agent. We have the responsibility to, what they say, know your customer. So when we were talking about, the title of this was Variable Annuity Suitability. Let's just talk about annuity suitability, because suitability is suitability. The agent is responsible to know their customer. We have to know the customer. There are some red flags that a customer might say to me, that's a red flag that I got to dig deeper on. Where's the money coming from? What's the source of that money? Why are you trying to do this? What's the goal of the money? So suitability is very, very important. It's part of the process. If you went to our site, ran quotes, or you talked to me, and you say, okay, that's what I want to do, you're going to have to get on the phone with my team. Everyone is licensed in every state so they can legally speak to you. By the way, if you're on the phone with someone, and you need to ask them, are you licensed in my state? If they're not, they're breaking the law. Everyone in my building is licensed in all 50 states. They can legally speak to you, and they're going to ask suitability questions, not from us, but from the annuity company that you chose. The questions that are asked are from the annuity company, so that when we submit the application for the annuity that you want, and then we've locked in the quote, their person at their desk at that company is going to look at your case from a suitability standpoint and review it, and then approve it or not approve it. I would encourage you to ask for a copy of the application, because that's where the games are played. It's a misdemeanor. It's actually, in some states, it's a felony. And it's kind of like filling out your mortgage application. If you fictitiously put something there, you can go to prison. I'm not sure it's that harsh for the annuity business, but it should be, because there's a lot of agents out there that will try to get more of your money by altering your net worth or altering your investable assets. That's against the law. So don't hesitate to ask for a copy of the application. It should reflect exactly what you told the person that's taking the application. That's part of the suitability process. Now, a lot of times these companies will come back and not approve it, or say that's too much money. And the person typically gets mad, and I get on the phone with them and say, I'm very, very sorry, but it's in your best interest. They're looking out for you. They don't want you to either overfund, or they're worried about your liquid assets. They're worried about you living day to day, you're putting too much money in, etc. That doesn't happen with our group, because they know those we've trained them on what to look for. And if they say, well, I've got $2,000 in the checking account, I'm going to put X amount in this annuity, they're putting too much in the annuity. But we get a lot of cases where we're reviewing on a third-party basis. We see some wild things. So suitability is your friend. The questions that you have to answer confidentially is good for you. It's a good thing. So don't hesitate to provide that, because you're getting filtered at our level, the Annuity Man, then you're getting filtered at the suitability level at the carrier that you choose. So you got two levels that are looking out for your best interest. In essence, acting like a fiduciary without the plaque on the wall, putting your best interest ahead of everything. So suitability, it's a good thing. It's part of the process in the annuity world. How AI is going to change all of this, I don't know. We're looking at some things that can maybe make the process go a little bit smoother for you. But at the end of the day, right now, at this day, AI means actual individuals when you work with the Annuity Man. So go to my site, theannuityman.com, run quotes, download the books, watch more videos, see the live events, sign up for the live events. I do one a month. You can email me, stan@theannuityman.com. One last thing, above my head spinning clock is a video that I did on why people still hate annuities. And I go through that. And I blame the people that need blame for that. Not me, of course. I'm trying to edutain everyone out here on how they actually work. But there is a reason that the bad image, when people say annuities, they want to throw up. And I blame the agents and the advisors a lot of times, but also blame the people that talk about them that don't know what they're talking about. But that's a fun video. You'll have a good time viewing it. It's one that you'll probably share with your friends because I kind of go off, like I sometimes do. Hey, I'm Stan the Annuity Man. Thanks for joining me. We'll see you next time.